Hello, traders. Gary Wagner with the Gold Forecast here. It is Tuesday, the 4th day of January, approximately 8:30 here in Honolulu, Hawaii, and this is the daily report. Gold under significant pressure, losing much of the ground that it's kept up, currently trading off about $36, $37. That is due to predominant selling. $32, $33 of that $36 fall is predominant selling. Today's report, we are going to attempt to answer the one big question on most metals traders' minds. Where will this sell-off end? And what is a safe point to work with this correction? We'll try to take a stab at that all on today's daily report. To get an indication of where this market might find a bottom, I'm going to be looking at a few different charts today, and I'm going to try to hurry this along because I do have a lot of information to cover. We are looking at a 2-hour candlestick Fibonacci harmonics chart, and you can see quite eloquently that it is broken through almost all major levels of support. Right now, what I am looking at is we do have, and this is not Fibonacci, but a trend and support and resistance analysis based, we do have a support level here, which is tracking at approximately 1372. And then we do have 1369 as a major Fibonacci retracement component right in here. That's 1369, excuse me. These are levels. We right now have the first time in which we have found some sort of a tentative bottom, but these are the areas that we might want to look at to see if in fact gold can find some support within this area. Traders, we're looking at the daily chart that I look at my Elliott Wave and longer term cycles. And the most interesting fact is that we have absolutely gotten to a critical point. As you can see, this is that beginning of this rally that we got at the end of last week. And as that market moved up, it moved up quite nicely. However, it is currently in most critical area in that it has, without a question of a doubt, dipped and broken below this support line that we have been looking at and we have been considering so critical over the last month or so. Traders, one area that I do want to look at if and when the market does trade down to this area is going to be around 1364. As you can see, what we have done is we have created a weekly chart, and I have put in a Fibonacci retracement from this last rally here at about 1150 all the way up to here, our record top, of course. And when we look at the 23% retracement of that move, that gives us 1364. Do I believe that this is simply a correction or an actual shift or change within the perception and overall outlook of gold? I am going to tell you, I think that this is not a simple correction, but a correction nonetheless. I am going to look to position myself from the long side once we have the types of indicators that I am looking for. There's a particular candlestick pattern typically that I look for at the bottom of these waves. My fellow subscribers that have been with me for 3 to 6 months have been involved in at least 2 to 4 buys successfully by using this technique. It is a 3 river star variation, and we are going to be looking for that if in fact this market continues to trade lower. You know, traders, on the 30th of December, I recommended that we pull our profits. We're along at 1382, again at 1385. At 1405, we pulled our profits, and this was on the 30th of December. On the 31st, I believe gold moved up to about 1421, and I really believe we had left some money on the table, but I ended our report on Friday the 31st by talking about a story about Herbert Hoyle, one of the more successful traders. When he was interviewed, they asked what he attributes his success to when so many others fail in the market. His simple answer was, I always sell too soon. Well, I do have to say that today I do believe we were able to sell too soon. We'll look to position ourselves alongside. Look, we're flat in the market. Let the dust settle. Let's see where this market wants to go. As I say, I believe a pretty critical area is going to be around this 1364 if in fact the market can trend to that area. And if we see it go to that area and find potential support and line up with the three indicators that we look at, all giving us a potential bottom, I think, traders, we're going to have a good trade on our hands and a significant gainer for the first part of this year. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.